Good morning and welcome to our Tuesday Market Outlook session. My name is Prakash Vijayana. I am an analyst here at Options Play, and today I will be walking you through how we are viewing the current market. So quite a lot to get through today, and before we get started, just a quick disclaimer. The types of securities, forms, and research tools used in this video are for demonstration purposes only and should not be considered a recommendation by Options Play or a solicitation or an offer to buy or sell any securities. This video is not intended to be used for individual tax, legal, or investment planning advice. Okay, our agenda for today. As usual, we'll be starting off with the major indices. We'll be highlighting some of the key levels. We'll be going over some technicals to get a better idea of market direction. And we've seen a very strong rally here in equities and even a breakout here in small caps recently. So a couple of signs of an early bull market, which we will get into. From there, we'll be moving on to fixed income. A lot of volatility here the last week or so in bonds and yields. So markets were pricing a more hawkish Fed last week, and that was not the case. So, we've seen a bit of a reaction there. From there, we'll be looking at sector rotation and highlighting some maybe narrowing leadership that we've been noticing over the last couple of days. And we'll be taking a look at some of the sectors that are outperforming and underperforming the market. We'll be taking a look at some of the subsectors of interest, and we'll end today's session with some bullish and bearish market movers. My name is Prakash Vijayana. I'm an analyst here at Options Play, and today I'm really excited to share with you our thoughts and analysis on the current market. So, S&P 500. I highlighted last week that there were a lot of headwinds here, but equities seem to be navigating their way through them pretty well. You can see a strong rally here all the way to just over 450, a pullback and a strong bounce from 428 or 29 all the way here to all-time highs recently. And there are pricing is pretty overbought here. You can see here momentum has been strong, but it has approached an overbought condition. And I wouldn't be surprised of a small pullback here for the S&P 500. Fun fact, the S&P 500 has rallied over 1% or more for each of the last 4 weeks. And that has only happened 66 times in total since 1928. And can I make it 5 consecutive times? Well, that's only happened 16 times since 1928. So right now, there's roughly around a 24% chance of that 1% gain this week. And I do think, even if it doesn't happen this week, a pullback over the next 2 weeks is certainly on the cards. And ideally, I would like to see a pullback. I don't believe that a pullback will go all the way back here to around the 453 level or so, but maybe a bit of consolidation or a slight pullback before a continuation here higher for the S&P 500. Moving on to the NASDAQ 100, similar price action to the S&P, strong rally, pullback to 350 or 353 or so, and then strong bounce and a breakout of 382 here. So also like the S&P 500, price is pretty overbought here, and you want to see a bit of a pullback here before continuation higher. But that being said, it's important to note that November has historically been a pretty strong month for equities in general, especially when August and October sees above average returns, which has been the case this year. So I do expect to see the major indices there continuing higher, and especially with the NASDAQ 100, it's definitely finding some fuel with technology and the discretionary sector. So moving on to the NASDAQ 100 versus the S&P 500 relative chart here. So on the left, we have the NASDAQ versus the S&P. On the right, we have growth versus value. So you can see here the NASDAQ 100 is starting to break out relative to the S&P 500. And we can see here that growth is starting to also break out relative to value. So really, you can see here growth is really starting to confirm this breakout here for the NASDAQ 100. And I do think while both the outlooks for both the S&P and the NASDAQ are bullish, I do expect to see more outperformance here for the NASDAQ 100. Okay, small caps. Finally, we have seen a breakout here in small caps. We have seen this we've experienced this long, almost a year-long consolidation range. Price was pretty neutral, and small caps were really struggling to break above 240, 235, 240 here. And then over the last few days, ever since price broke out of a squeeze over here, there's been strong momentum for the Russell 2000. Like the S&P 500 and the Nasdaq 100, price is currently overbought. So I do expect a bit of a pullback before a continuation higher. But this is very constructive for equities as a whole. It indicates that small caps are enjoying the participation here, and are joining in on the rally here, enjoyed by the large cap names. So I do think there's significant more upside here for small caps. Next, taking a look at bonds here. So lots of volatility recently. Price has maintained above that 146 support level, and that really comes down to the fact that markets were pricing in a much more hawkish Fed, which was not the case at all last week. The Fed really focused more on tapering rather than increasing interest rates, and that's why the support level has been maintained here for bonds. So I do think there's a possibility for a bit of a grind higher here, back to 151 resistance. That being said, momentum hasn't been amazing. So if there is a grind higher, I do think, and if momentum doesn't increase significantly, it opens the door for a better risk to reward entry for a move over here for TLT bond ETF. And that leads us to yields. So yields, strong rally all the way to 170 basis points, which we highlighted last week. And then a very quick reversal lower. We saw a consolidation before the Fed meeting. And since then, yields have really moved lower here, breaking below 145 basis points soon. And I do think this is pretty constructive for a move back down to 137 basis points or so. So that should yields continue lower, expect a bit more headwinds for financial stocks or banking stocks in general. But then should they continue higher, should they bounce higher from here, that should provide some fuel for financials to move higher as well. The dollar index. So dollar index is pretty much in a bit of a consolidation phase right now. We saw a strong, significant breakout above the 93.5 level, and pretty much sideways movement between 94.5 and 93.5. And I do expect this consolidation to continue. But what is interesting is, despite the fact that the Fed weren't as hawkish as originally anticipated last week, the dollar index did not break below the 93.5 support level. So it does to me, that tells me that there is really more of a longer term bullish bias here on the dollar. Although right now, it's definitely looking on the more neutral side. And that leads us to gold. So gold, pretty much range bound here in recent weeks. Very choppy price action. We see a grind higher basically to 170, 171 resistance. I think this resistance level is pretty significant. And unless there's a significant decline in the dollar, I cannot see gold breaking above this level. That being said, should the dollar break below 93.5, it does open the door for quite a big move higher here for gold. But right now, I'll be looking for bearish price action at current levels and a good risk to reward entry for a move back lower to this range bound support at around 161. Okay, crude, interesting price action. Strong rally all the way to 84 and a bit of a pullback. And you can see it found support here at around 78, 78.2. And it bounced higher, but not really strong momentum here. You can see it's already struggling to get past 82, 83 here. So this tells me that there's maybe a bit more consolidation ahead within this range, or even a move lower back to retest the 78 level. Should that level be broken down to, it does open the door for maybe to move back to 75, 74. But oil is still fairly bullish on the long term, unless there's some significant change to the supply and demand dynamics that we are facing at the moment. So taking a look at the sectors. Last week, we saw 10 sectors, 10 out of the 11 sectors having bullish trends, and only one with a neutral trend, which was communications. This week, not as good. We only see 9 sectors with bullish trends and 2 sectors with neutral trends, communications and utilities. So, sorry. So a bit of a decline here in overall participation, but nothing to be concerned of just yet. If we take a look at sector rotation, we only see 3 sectors in the improving and leading categories and 8 sectors in the lagging and weakening categories. So a big shift from a couple of weeks ago where we saw, this was almost flipped over, where we saw around 7 or 8 sectors in the improving and leading categories and only 3 or so in the lagging and weakening categories. And what we can see here, good relative strength here for technology and discretionary. We can see a little bit of loss of momentum here in discretionary, but overall technology and discretionary are providing that leadership for equities. But almost every other sector is performing quite poorly. We see low momentum here in real estate rotating out of leading, energy as well, weakening relative strength, utilities, industrials, financials as well. There has been a bit of an uptick here in momentum for communications, and we will be analyzing this in a minute, but I do not think this is significant at all. And as well as staples here, a bit of an uptick in momentum, but struggling to break above, struggling to really move into that improving category here. As we can see, it's starting to lose relative strength. Okay, so looking at a few sectors here, we can't ignore technology right now. Technology has shown a strong breakout of above 159, 160. And I do think it's a little bit overbought at the moment. So I do expect a bit of a pullback before a continuation higher. But the fundamentals and technicals align for a bullish case here in technology for the next few weeks. And then looking at communications, it's a very different story. We see the strong rally and a significant pullback all the way to around 79, and price hasn't really found the momentum to break above that 82 level. We saw on Friday it actually tested and failed, rejected that 82 level, and yesterday price did move lower with some strong bearish momentum. So I do think this is constructive for a move lower and a bit more range-bound movement over the next few weeks for communications. Sorry about that. Next, we have healthcare. So healthcare was showing very strong momentum for a few weeks here. We saw a big bounce up from 125 all the way to around 135. A slight pullback. Momentum has shrunk in recent days, but we can see it's finding support at around 131 here. It bounced higher from that level on Friday, and it does look set to continue higher, back to all-time highs at around 136, 137. Okay, so moving on to some subsectors of interest. First, we have the airline, the global airline ETF, jets. Airlines have been difficult to time in general over the last few months. There was a false breakout here in airlines, and we thought that was maybe a recovery play for a further move ahead. But then we saw this move all the way back down to 22 support, and then a bounce higher with strong momentum all the way back down, back up to the 24, 25 resistance level here. Now, strong momentum does indicate a break above this level and a continuation higher. But due to the fact that airlines really are a reopening play, it's difficult to time them. I would maybe, if there is a breakout, I'd probably wait for a retest before a continuation higher here for the Jets ETF and airlines in general. But momentum has improved here, so definitely want to keep an eye on for this week. Next, we have the Biotech ETF, IBB. So we can see here a significant decline and a bounce back to 165, which it did reject, move lower significantly in the last few days. And price action is quite bearish at the moment. If we look at the weekly chart, we see a strong move lower, a bit of a pullback here, a bit of a rally back to 164. And I do think, and a strong rejection there last week. So I do think this is indicative for a move back lower here for the biotechnology ETF all the way to maybe 146 or so. So look for a break below on a daily time frame below 154, and that will provide additional confirmation for a move lower here back to 145, 146. Moving on to semiconductors, this is a sector you simply cannot ignore right now, or subsector, I should say. Semiconductors have been strong. We are seeing signs of a new capex cycle ahead. So this means companies are going to start spending on improving their current systems and making them more efficient. This means spending more on technology, and semis are perfectly positioned to benefit from that. So lots of long-term potential here for semis. And I think, in my opinion, the SMH ETF, that's a great way to gain this broad-based exposure to this industry, which has names that are generally higher beta, a bit more volatile. And I think SMH as an ETF provides a safer broad-based exposure. And you can see very strong performance here for SMH. Price was finding support at 250, a very strong rally here all the way to around 300. And it actually looks set to open higher this morning. I would like to see a bit more of a pullback. It is overbought, definitely, but I don't think there'll be a significant pullback. Momentum is just too strong, and I can't see a pullback all the way to 275 happening anytime soon. But any small pullback does provide a good long opportunity here for SMH. Next, we have Cisco, which is our market observation, our first bullish market observation for today. So Cisco, it's a cybersecurity name. And if you look at the chart itself, you can see price to break above that minor resistance level, just below 57 or so. And it has come back to kind of retest it and bounce back twice already over the last few days. When you look at Cisco relative to its peers, it hasn't performed very well, but a lot of its peers are at all-time highs, and it's difficult to get a good entry point there because when stocks trading at all-time highs, you really don't know what the risk to reward will be from a technical perspective. Whereas here with Cisco, it's part of the cybersecurity industry, which is doing quite well at the moment. And I do think the setup here does provide a good risk to reward for a move up higher to around $60 or so. Okay, next we have Applied Materials. So Applied Materials, OC here was a strong, strong consolidation range between 143 and 124 for almost a whole year, really. And over the last few days, there was a strong breakout above that level, price rally to 155 or so. Bit of a slowdown there yesterday, and hopefully price can kind of pull back a little bit back to that 143 level or so. And what I'd look for here, should that happen, is some bullish price action. And that would really open the door higher for Applied Materials, where the fundamentals and the technicals here both align for a good bullish move here in the stock. And our last bullish market observation that we have today is Spot. So Spot, from a fundamental perspective, I think it's fantastic the way that they've started investing more on the podcast side of the business. And I do think there's a lot of long-term potential here for Spotify. What we can see here is a bit of a decline in price, a declining trend here with price continuously rejecting that level, and a bit of a inverted head and shoulders here, right? So see there, the shoulder, the head, the shoulder, and a strong breakout, a bit of consolidation period, and a strong move higher here all the way to 300 or so. Now, price did reject that level, but I don't see bearish momentum very strong here. I think it's just simply, it looks like to me like it's pulling back, and I would probably look for some bullish price action at this level here for Spotify before looking for an entry that could break above this $300 resistance level. And again, the fundamentals are good, and the technicals look to be starting to reverse here higher for Spotify. And should that 300 level be broken, you can see a move here back to all-time highs at around 380 or so. So plenty of upside here for Spotify. Okay, for our first bearish market observation today, we have PENN National Gaming. I mean, PENN has been fairly weak here from not just a fundamental perspective, but a technical perspective as well. You see a strong decline, a bit of a consolidation, neutral few weeks, months And then earnings really made price gap all the way lower here, below 2 levels of support, below that 64 level area. Price came back to retest that on Friday. It rejected it and is now moving lower here. So I do think there is further downside here for PENN. And you really have to look at the weekly chart to see where those targets would be. And I think the first target here would be at around 52 or so. And should price break below that, there is possibly a move lower on the cards, so all the way to around 30, which was a previous level of support if you go back all the way to 2020. Okay, Visa. So Visa, a bit of a head and shoulders pattern here, as you can see. We have a shoulder, the head here, and a shoulder. Price broke its long-term trend line before performing that right shoulder. And we can see earnings really caused Visa to break below the neckline, the 221 neckline. Since then, price has come back to retest it. Yesterday, it rejected that level, but I'd like to see a bit more bearish price action here to really confirm a bearish entry all the way back to 208 or so. That being said, momentum has been fairly weak here. So Visa, instead of trading in an area where it provides a very good risk to reward for a bearish entry. And finally, Intel. So Intel, similar price action to Visa. We see a strong decline here, bit of a neutral phase, and earnings really making it break below 2 support levels after breaking above, after initial breakout there in the last few weeks. So you can see here, earnings made a gap down to around 50. It did retest the 51.50 previous support level. It failed to break above it, rejected it, and it moved lower. Prices rallied back up to retest it, failed to break above yesterday. So again, look for bearish price action here for confirmation, maybe for a move lower back to 48, or even lower to around 45 or so here. With that, that's all I have for you today. Thank you so much for joining me during the session. And I hope that you gain some insight as to how we are viewing the current markets. I hope you have a great trading day ahead.